Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at gold prices. So let's take a look at the chart here. I've got gold on 4-hour candlesticks, and as you can see, as I've marked up here with this box, over pretty much the last week, in fact it's even more than the last week, gold has been stuck within quite a tight range. Why is that? Well, for much of the last couple of days, up until yesterday really, gold was kind of waiting for fresh fundamental drivers. And also, if you look at other asset classes that are important to gold, such as bond yields, in US government bond yields and the US dollar, well, those two asset classes have been moving in ways which are sort of contradictory when you look at gold. So for example, the US dollar generally in the last couple of days has been strengthening gradually, whereas conversely, US government bond yields have been generally over the last week or so have been weakening. Now typically a stronger dollar is bad for gold, but falling bond yields are good for gold. So it's kind of those two things have evened out and helped keep gold in this range. In terms of the fundamentals that are driving gold right now, as you can see, gold has pretty much moved back to the top of this range. You can see we're probing in this, well, in the 1810s, in the mid 1810s. Look, we're at 1815 right now. And yesterday we had US CPI data. It was a lot hotter than expected, and that, according to some analysts, and I think I agree to an extent, that has reignited some interest in gold as an inflation hedge, which seems to have helped lift the precious metal to the top of this recent range. But the problem is, when inflation is hot, well, that's going to have potentially have hawkish implications for the US Federal Reserve. Basically, it could bring forward their timeline to tapering their bond purchase program, and also their interest rate hike program that's going to be coming potentially from next year. And obviously that could all feed into higher bond yields, which, as I said at the start of this video, tends to be bad for gold. So yeah, high inflation, bit of a mixed implication on gold, and that's perhaps why we haven't seen gold move to the north of this recent range just yet. In terms of resistance, we've got the 50 and 21 day moving averages here at 1827 and 1835, so there is a bit of resistance, but if gold is able to push on and push past those moving averages, then potentially it would be able to get back to this, what I think is the next key level of resistance. It's that previous low, the pre-hawkish FOMC shift that we saw last month, the low prior to that, which was at around 1840. That's the key resistance. In terms of support, obviously we've got the bottom of this range, which is around 1790, and then if we were to break below that, you'd want to be looking at this end of June low at 1750. So those are the two main sort of levels I'm looking at, up here and down here. In terms of what's next fundamentally for gold, well, we've got an important event over the next 2 days. It's FOMC Chairman Jerome Powell. He's participating in his semi-annual testimony in front of Congress. It's a 2-day event. The first day is the most important day, but obviously there's a Q&A on both days, so he could say something interesting on the second day. There's always a possibility. And analysts are very interested as to what his tone is going to be. Is he going to be concerned by the recent higher than expected CPI data that we saw yesterday? And is he going to sound a little bit more hawkish? Or is he going to reiterate the current script, which says that inflation is going to be transitory, and tries to play down fears about imminent tapering of the Fed's bond buying program? So it's all about his tone on policy, really. And that, I mean, that's another reason why gold hasn't been able to break above this range yet, because we're in wait and see mode. And depending on his tone, if he's hawkish, which I think he's potentially going to sound a little bit more hawkish, which would be a negative for gold. But if he does sound dovish, then, I think we're going to see further upside. But yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.